If you're a renter, chances are you've got renter's insurance. Maybe your landlord even made you get it. But let's be honest, do you really know what it pays for when things go sideways? Well, we're about to find out. Okay, just imagine this for a second. It's a total nightmare. You walk into your apartment and there's water everywhere. Your laptop is toast, your favorite couch is soaked. So who's on the hook for that? Is it your landlord? Are you just out of luck? This is exactly why you need to know what's in your policy. So, in the next few minutes, here's our game plan. We're going to cover what renter's insurance is, the 3 main pillars of your coverage, what it doesn't cover, and then we'll run through some real-life tests. Sound good? Let's do it. All right, first things first, what even is this stuff? Here's the most important thing to remember. Renter's insurance covers your things, not the building. The actual walls, the pipes, the roof, that's all covered by your landlord's insurance. Your policy is a shield for everything you own inside those walls. You know, pretty much every standard policy is built on 3 key areas of protection. Think of them like the 3 legs of a stool, the foundation that holds up your whole financial safety net. Let's break them down one by one. So, pillar number 1 is personal property. This is the one everybody thinks about. It's for your stuff, your furniture, your computer, your clothes. If they get damaged or destroyed by specific events or perils, as the insurance folks call them, we're talking about things like a fire, a break-in, or that burst pipe we were just imagining. Okay, now this part is super important. When it comes to getting paid for your stuff, there are 2 ways it can go: replacement cost or actual cash value. Actual cash value, or ACV, gives you what your 5-year-old TV is worth today, which, let's be real, is not much. But replacement cost, RCV, gives you the cash to go buy a brand new, similar TV. It costs a few extra bucks a month, but wow, the payout is way, way better. Pillar number 2 is called loss of use, and this one is an absolute lifesaver. Let's say a fire makes your apartment unlivable. Where do you go? This coverage pays for you to live somewhere else temporarily. It covers the hotel, your meals out because you can't cook, even laundry. It's a huge relief when you're already stressed out. And that brings us to pillar number 3, personal liability. Honestly, this might be the most underrated part of the whole policy. If your friend comes over, slips on a wet floor and decides to sue you, this covers your legal bills. Or if you accidentally leave the sink on and flood your neighbor's apartment downstairs, it covers that too. It's massive financial protection. Okay, so we've talked about all the good stuff it covers, but it's just as important to know what it doesn't cover. And don't think of this as bad news. Think of it as being a smart consumer who actually understands what they're paying for. This table breaks down the big ones perfectly. Things like natural floods and earthquakes. Nope, not covered. You need a completely separate policy for those. Got some pricey jewelry or a nice art piece? Your standard policy has a limit, so you need to add on a special extension. It's called a rider to cover its full value. And this last one is huge. Your roommate's stuff is not covered by your policy. They have to get their own. And there are a few other common things left out. Pest problems like bed bugs, that's usually seen as a maintenance issue, not an insurance one. Your car getting broken into, that's what your auto insurance is for. And, well, it probably goes without saying, but it won't cover damage you cause on purpose or just normal scuffs and scrapes from living your life. All right, theory time is over. Let's put this all into practice. We're going to run through a few quick, real-world scenarios to see how this stuff actually plays out. First up, you accidentally leave the faucet running in the bathroom and it overflows, completely warping the landlord's beautiful hardwood floors. Are you on the hook for those thousands of dollars in repairs? And the answer is yes, your insurance should cover it. This is a textbook case for your personal liability coverage. It's literally designed to pay for accidental damage you cause to other people's property, including your landlord's. This is a big reason they require you to have it. Okay, scenario number 2. Someone breaks into your apartment, but they only steal your roommate's brand new laptop. Does your policy help them out? That's going to be a hard no. Remember that exclusion we talked about? Your policy is for your stuff and your stuff alone. Your roommate absolutely needs to have their own policy, unless they're officially named on yours. Super important for anyone living with other people. Okay, how about a smaller scale accident? Let's say you're moving a chair and you accidentally slip and crack one of the apartment's windows. Is that covered? And the answer here is probably yes. Just like the floors, the window is part of the landlord's property. So your liability coverage can step in and pay for that repair since it was a genuine accident that you caused. All right, last one. Your bike gets stolen, but it wasn't stolen from your apartment. It
It was locked to a bike rack downtown while you were getting coffee. Is it still covered?
Yes, it typically is, and this is a great feature. Your personal property coverage usually follows you around. Most policies include what's called off-premises coverage that protects your stuff even when it's not at home.
So after going through all of this, what's the big idea? What's the ultimate takeaway? It's that renter's insurance is so much more than just another monthly bill. It is your own personal financial safety net.
I think consumer advocate Tejri Body said it perfectly here. Knowing this stuff transforms renter's insurance from this vague idea into a sharp, precise tool you can use to protect yourself. And that's really the whole point. So I'll just leave you with this one question. Now that you know what it really covers, is your safety net as strong as it needs to be?